welcome back to this week's Manager's Thoughts, coming to you from Kelly at Synergy Asset Management. So let's get right into it. Starting out with a quick market update, the markets were expected to be a bit more choppy this week with the Fed rate hike in sight and the summary of economic projections coming out as well. And so with all of these economic decisions and data coming out this week from the Fed, we totally expected some volatility, and we saw that. Thursday, September 22nd, we saw the S&P and the NASDAQ close about 2.4% down so far for the week, and the Dow Jones closing about 2.1% down so far for the week. On the other hand, we saw Treasury yields spike this week, and so you can see the 10-year Treasury yield on the chart there. It was ending at 3.7% by the end of the day Thursday, and it rose about 6% so far this week. So as a quick reminder, the Fed's dual mandates are not only to retain maximum employment, but also to maintain price stability. And so we've seen unemployment hold steady for the last few months despite a few large layoffs, but we've also seen inflation hold steady as well. And so CPI in August, as we know, was 8.3%, and the Fed has not been happy with this sort of steadiness in inflation. And so on Wednesday, September 21st, right after the Fed meeting, Powell announced an expected 75 basis point rate hike and a continuation of reducing the Fed's balance sheet. Not only was this Fed meeting important because of the rate hikes and the balance sheet reduction, every other Fed meeting, we get an SEP or a summary of economic projections. And so this September meeting, we have that, and it includes really important forward-looking data such as GDP growth expectations and unemployment expectations coming from the presidents of the Federal Reserve Banks and the Board of Governors as well. In this Fed meeting's SEP, the median expectation for 2022's ending federal funds rate was 4.4%, and so this means 50% or more thought that the ending federal funds rate for 2022 should be at 4.4%. This is a whole 100 points higher than the June SEP estimate of 3.4% for an ending federal funds rate of 2022, and you can see by the end of 2023, the Fed members believed that the rate should be even higher, and all but one member saw the federal funds rate standing above 4% by the end of 2023. Following 2023, we can see the Fed seems a little bit more scattered, but in the near term, the Fed has pretty much decided that rates will be 4% or higher in the next 12 to 18 months. Another topic we wanted to note this week was the layoffs and the restructurings in a few large companies. And so this is right before the earnings season coming up in a few weeks in October. And we saw a few notable companies with recent layoffs, including Google, Meta, Walmart. And so, for example, Walmart, they cut 200 of their corporate staff in August, and they said American consumers were pulling back on the purchases of general merchandise to focus on necessities like groceries. And so the company said it was expecting operating profits for the full year to fall as much as 13% as they were forced to continue marking down inventory that wasn't selling. Are these companies over-preparing for a recession, or are they ahead of the curve? Honestly, we don't know, and so only time will tell how these layoffs are going to turn out. Delayed after the Queen's recent passing, Thursday, September 22nd, we saw the Bank of England announce a rate hike decision of 50 basis points for the second month in a row. And this is really in reaction to August inflation data coming in at 9.9% year over year for the UK, and an expected 11% peak in inflation to come by October. Here at Synergy Asset Management, we're staying on top of all of this news about inflation, rate hikes, and corporate earnings as we head into this next earnings season in early October here soon. And so each of our portfolios, as we know, has a mandate, and so we're closely monitoring these mandates and using these economic updates to manage each portfolio per its mandate and its nature to best take care of our clients. Thank you for tuning into our Manager's Thoughts update this week, and we look forward to providing another update next week.